the team over at Capitol Square, while they're getting on the stage here, I was fortunate enough to be able to co-host an event with them in Richmond, Virginia, just last week, I think it was, or was it the week before? Time flies by. But we have a video presentation that does a really nice job of introducing Capitol Square. So I'm going to play that video right now while Lewis and Whit and Natalie get up on stage. So without further ado, here it is. We're standing in a Capitol Square building right now. This is the site of their OZ Fund 1 development project in the Scotts Addition neighborhood of Richmond, Virginia, where there's a number of development projects funded by OZ Capital and built by Capitol Square. A lot of great restaurants that have sprung up in recent years.
Some good food.
We had a group of registered investment advisors, RIAs, broker-dealers, registered reps, doctors, lawyers, and even 2 law firms that I used to work for.
Everybody's happy. We just got to keep it going. We really hope that Congress can extend the program and possibly make it permanent. That would be tremendous.
It's been a very exciting day.
It has been.
And now we need Congress to help us, give us a little lift.
So that was our event that we hosted in Richmond, Virginia earlier this month. Great timing to be hosting that event on the heels of some really meaningful congressional legislation. This tax bill that's currently progressing through the Senate.
Oh, wonderful. How are you, Jimmy?
Good to see you both. So Lewis and Whit and Natalie are presenting Capitol Square Opportunity Zone Fund 9.
Thank you, Jimmy. Hello, everyone. I'm Lewis Rogers, founder and co-CEO of Capitol Square. The dairy bar property you're going to hear about in the Scotts Addition neighborhood of Richmond, Virginia, is Capitol Square's 9th Opportunity Zone Fund. The prior funds have done phenomenally well. In the last couple of weeks, we have officially opened the Mave. That's an exceptional Class A mixed-use multifamily community in Raleigh, North Carolina. And we're just getting back yesterday from the grand opening of the Nickel Hotel in Charleston with an array of Bravo channel influencers enjoying the hotel. And boy, did they enjoy it until 2 a.m., Jimmy, until 2 a.m. The OZ project just across the street from the dairy bar is the Otis, is the CoStar Building of the Year. So all of that is an excellent track record to launch the latest and greatest project, OZ9. OZ9 is going to be off the chart. It's going to be the best building anywhere in the region, barring none. We will have the very best amenity set anywhere. And it's being built by the same development team at Capitol Square that successfully built the prior 8 ozone projects. But, OZ9 may be the last of the Mohicans. If you remember that book from grade school, we've done such a good job in the Scotts Addition neighborhood that Scotts Addition may not qualify as an OZ in the future. So get it while you can to present what may be the last of the best of the best of the best. Whit Huffman, my co-CEO. Whit, take it away.
Thanks, Lewis. I've got Natalie here with me today, and we're going to take some time to walk through the project, the plans that we have for the site. And Natalie, why don't you take us away?
Sounds good. Can you guys hear me okay? Great. Well, we have a slide here. It's always fun to look at before and after pictures. So something we're really proud of most, if not all, of our OZ funds. We have transformed what are typically surface parking lots or abandoned or underutilized warehouses, and we turn them into tax revenue generating projects. And here to the left, you can see a screenshot of a Google Earth image of the OZ9 site, and on the right is a rendering of what we plan to build and deliver in the 2027-2028 timeframe. So just for a quick executive summary, we're going to flip through slides pretty quickly. But if you tune out over the next 10 minutes, I think this slide really captures what's most critical about what we're presenting to you today. OZ9 which as Lewis said, is our sixth development in this single neighborhood. We have designed it to be a 320 unit multifamily building, but we will operate a third of the units as an apartment hotel. And we'll talk a little bit more about why we've incorporated that into this execution. But we have already acquired the land. We acquired the land in April of last year. And within a couple months after that, we received full project entitlements for the building. So we have what's called our zoning approval for the site. We got an extra level of height on the building so that we could maximize density on the site. So we've de-risked the project in that sense. We executed a franchise agreement last month with Marriott to flag the what will be 95 apartment hotel units in the building. We'll chat a little bit more about that, but that was a huge milestone for this project and a real testament to the demand for hotel product in this neighborhood. We're working diligently through design right now. How we do design, our design process is we're always doing price checks with a general contractor along the way to make sure we're staying within budget. And we have another price check coming up here in a few weeks. But we plan to sign a construction loan and start construction in the first quarter of next year. Just for a quick Capital Square overview, we're a national real estate investment and development company. We specialize in tax advantage real estate offerings, including Delaware Statutory Trust. We have a real estate investment trust, and then relevant for today, we are a major player in the opportunity zone development space. Thanks to Lewis being a tax attorney by profession, Capital Square was one of the first movers in the opportunity zone space. We were able to digest and understand the changing regulatory environment in those early years after 2017, and we were able to launch our first fund in 2019. But what's great about Capital Square in terms of a OZ sponsor is that we have a very large multifamily portfolio across the country. We have over 15,000 units, not just in Central Virginia, but in markets all through the Southeast, over through Texas and to the Southwest. So we're able to pull on a lot of resources at our company. We have best practices. We understand the multifamily market really, really well. And that helps us on the development side when we're designing and setting up a new building. A little bit on our capabilities. So what makes us pretty unique, I think, as an OZ sponsor is that we do all of our development in-house. So we have our in-house development team, and we are able to work with and leverage our other corporate functions like legal, accounting, asset management. But at the end of the day, Capital Square is developing our developments. We have tremendous construction management and property management expertise that makes us really effective on the execution side. And a little bit about our track record. Jimmy mentioned in sort of his intro that sponsors do things differently. OZ developers do things differently. Sometimes you have a commingled blind fund. Some people do single asset opportunity zone developments. All of our OZ developments to date have been single asset. So again, we're on our 9th one. So we have done 8 to date. So we need, as of yesterday, we need to update the slide because we've actually delivered 2 more OZ developments just in the last month and a half. So we're now close to 1,000 units delivered since we started building OZ developments, and in 2025 alone. So this year we're delivering over 1,000 more multifamily and hotel units. So it's a big delivery year for us. Our portfolio represents over $730 million in gross asset value. We've been able to deliver, refinance, and return equity to our investors on our first 4 OZ developments. And I'm sure Lewis and Whit will want to chime in on that too. That's kind of a feather in our cap that we've really been able to execute on the business plan as laid out at the beginning on these developments and actually get refinance proceeds in the hands of our investors on those developments, which will help them pay their deferred capital gain tax at the end of next year.
Yeah, Natalie, I don't think that can be, overstated is the benefit of having a track record in the sector and a measure of success in terms of returning those refinance distributions, because I think, there's not many folks that are able to say that they've actually executed the business plan and done what the business plan was supposed to do. So kudos to you and your team. I think it's a rare thing in the opportunity zone space to have actually been able to do it. And I think, Natalie, we've done it, what, 5 times so far? We got 4 more to go.
That's it. Keeping us busy. I also like this slide because Jimmy always talks about OZ equity, but to get a development done, you need debt as well. You need a construction loan. You need fantastic debt partners. We work a lot with Walker and Dunlop to source our debt for our development. But you can see on this slide, we've raised close to $600 million in construction loan proceeds to support these developments, typically with regional banks or other groups. So we've fostered really great relationships on the debt side to ensure that we can leverage our OZ equity investors' capital into these projects. So I promise we'll get to OZ9 in a second, but since we're actively delivering projects now, just wanted to share this image. We were in Raleigh a few weeks ago with the mayor of Raleigh and other stakeholders in the city to celebrate the opening of MAVE, 297 units, 20-story tower. You can see on the left an incredible pool deck on top of a structured parking garage. This project, after only being delivered for a few weeks, is over 15% leased and is performing top of the market in Raleigh right now. So we're really happy to have opened this project. Whit, do you want to chat a little bit about the Nickel Hotel since we just came from here?
Yes, thank you, Natalie. We had our Nickel Hotel grand opening last night, a 50-key hotel in downtown historic Charleston on King Street, Upper King, which is designated as an opportunity zone. And one of the benefits of having great design partners, in this case, Morris Adjmi, was the ability to get an extra level of density because we were deemed architecturally significant, which is important on the peninsula. And because of that, we also then get a rooftop restaurant. So we've been very pleased with performance of the asset so far. It's got a great courtyard. I encourage all of you to check out the website, the Nickel Hotel, but one that we're incredibly proud of and have been working on for a long time.
And the reason this project is really relevant for our OZ9 pitch today is that this is an apartment hotel building that we have now executed and delivered. And the portion of our project in Richmond that we want to operate as hotel apartment units will be a similar concept. But not only have we delivered and executed on multifamily, but we now have hospitality or hotel product in our track record. And it's a beautiful property if you have an excuse to go down to Charleston. And finally, this is Chasen. This is 352 units in the Scotts Addition neighborhood in Richmond. So if you saw the aerial slide earlier in the presentation, this property is like to the far right of the screen. We are opening this building later this summer, early fall. And this is poised to do well. We're excited to bring this. It's sort of Otis was our first large project in this neighborhood. This will be our second large project in the neighborhood. And then OZ9 will be our third large project in the neighborhood. But it bodes well for us doing pre-development and starting construction on OZ9 because we will have lesson learned in real-time leasing and operating information in this neighborhood because of this project right here that is about to open. So just a quick recap of the development program, 320 units. We will have 5 residential levels over two stories of concrete podium, and the parking for the property will be housed in that concrete podium. We will operate a third of the units as apartment hotel units. There will be shared amenities between the guests and the residents. We'll have a fantastic pool deck on top of the podium, looking over the neighborhood, outdoor courtyard space, a fully equipped fitness center and lounge and other amenities. We have already executed over 30,000 square feet of retail in this neighborhood with our previous projects. We have brought incredible restaurateurs, retailers, and other users to this neighborhood already. We will have up to 15,000 square feet in this neighborhood, or in this building, at this intersection, which we really call the main and main of Scott's Addition. So excited to bring more retail to this neighborhood.
I think, Natalie, one thing, a question that we often get is, why another building at Scott's Addition? I think there's a couple key drivers, but I would leave the group with 2 points. One, over the last 4 years, 37 net new people have moved to Richmond every day. So when you think about the context of 55,000 plus people over the last 4 years, we're still chronically undersupplied from housing in this market. And specifically inside of Richmond, Scott's Addition is where everyone wants to be. I think you're about to jump into the key strengths. When you look at outperformance from a rent perspective, it leads the Richmond Metro by about 10% in terms of rent. You look at the average for Richmond, about $1,500 a unit. Average rents in Richmond for Class A, so 4 and 5 star communities, is northwards of $1,700 a month. So a leader both from a population growth perspective, but also from a rent growth perspective.
Yeah, your point on population growth in Richmond is so spot on. We've now leased 4 buildings in this neighborhood, and we know from our data that over 60% of residents moving into these buildings are coming from outside of Richmond. They talk to friends, they talk to people, and they hear that this is the coolest neighborhood to live in, and so this is where they want to come and move. So that net new migration into Richmond, a lot of them are coming to this neighborhood. So I won't go through every key strength of this project, but just to highlight a couple. Again, this is really a sought after neighborhood in the region for dining and entertainment. It was declared a historic neighborhood back in 2003, which prompted a lot of conversion of warehouses into things like breweries and distilleries and cool loft projects in this neighborhood. A lot of creative companies like marketing agencies came into this neighborhood. So this is really a dining and entertainment hub in the city. It's close to the museum district, which is home to our top cultural assets in the city, our big museums, the Science Museum, the Virginia Museum of Fine Arts. A couple blocks away is the Diamond, which is Richmond's AA baseball team, which is has one of the highest attendee rates in the country for AA. So it's a really fantastic neighborhood. And then second, we're just an experienced sponsor in this neighborhood. We've already said it a million times, but we built by the end of this year, we will have built over 900 units already in this neighborhood. And so we've created a business plan for OZ9 that we think is really unique and is poised to provide the best possible returns for our investors. So the reason we are going to operate a third of this building as hotel apartments, because it helps boost revenue. It diversifies the housing offering. We get a lot of inbound requests from people coming to the area and saying, oh, do you have a furnished apartment that I could live in for a few months while I make a decision on my permanent housing? We have traveling nurses. We're only a few miles from VCU Health, which is one of the largest regional health centers in Virginia. So we get requests around, is there furnished apartments for doctors or medical professionals or nurses who are in Richmond who are stationed. So we know that there is demand for this product. And we went through a long process evaluating different flags for the building. If you are not familiar with the Apartments by Marriott Bonvoy brand, I encourage you to look it up. There's a property called the Ann in Savannah that opened recently that's performing really well that has this flag. But utilizing a Marriott or partnering with Marriott on this project allows us to tap into the powerful engine of the Bonvoy booking platform. Marriott has a strong presence in Richmond already with close to over 30 hotels in the region, and their top performers in terms of occupancy and rate, average daily rate, are actually their extended stay offerings. So we already know that Marriott is doing well in Richmond. We know that their extended stay or longer term stay products are doing really well, and Apartments by Marriott Bonvoy is in their luxury tier, their higher end tier of flags. It's meant to be a soft brand for apartment hotel units that really cater to people looking for more apartment style living when they come to the city. And again, multifamily and hotel market fundamentals are really strong. 4% projected RevPAR growth on the hotel side and 4% rent growth projected by CoStar on the multifamily side. So Richmond is looking really strong. So just a quick market and location overview. Richmond, Virginia. Capital Square is headquartered here in Richmond, Virginia, but that's not the only reason why we invest a lot in Richmond, Virginia. It's been a fantastic and stable economy for many, many years. We're home to a lot of Fortune 1000 companies and actually have several headquarters. It's very unusual for a city of our size to have this many corporate be home to this many corporate users. We have access to a lot of the U.S. population. We're very centrally located, and we're in Virginia. We're in a place that has an affordable cost of living, certainly compared to a lot of the cities where we're drawing people to. You can see on the right here, we've been the recipient of many accolades, not just related to multifamily or to the apartment performance, but related to hospitality and travel. There's really more and more people coming to Richmond for leisure purposes. Just a little bit on the multifamily demand in this neighborhood. So there's been a few things that have come out recently that has given us a lot of encouragement. Richmond ranked number 7 among the top 50 apartment markets in the country for rent growth at 3.6. And this was based on looking at year end as of May. So again, 7 out of 50 top apartments. Whit already talked a bit about the migration. We're ranked number 7 in top 20 metros in the country for millennials. We've had close to 11% increase in our millennial population in the last 5 years. That's the reason why our home prices have gone up so much in Richmond. It's really hard to buy a home. We have a lot of people being forced to rent in Richmond because the for sale environment is really tough here. And then Scott's Addition is performing even better than Richmond as a whole. So we know this from our own existing portfolio in the market, which is close to 600 units currently. We have above market occupancy in our buildings currently in the neighborhood. We're over 95% occupied, which compares to 91% in the market. We also command rental rate premiums. Our rents in our buildings in Scott's Addition average $1,700 to over $1,800 per month per unit, and that compares to just over $1,550 in the market. So Richmond as a whole is performing really well, but Scott's Addition, and specifically our portfolio in Scott's Addition, is doing even better. A little bit on hotel demand. So if you're looking at this map and don't have any idea what you're looking at, that's okay. It's more just looking at the light blue is where our project is located. And if you look at a 2-mile radius around our project site, there have been no hotels built in a 2-mile radius of our site since the year 2000, except for one, a small Courtyard Marriott that actually is across the interstate from Scott's Addition. And so when we sort of realized that statistic, it was kind of mind-boggling to us because Scott's Addition really is the dining and entertainment hub of the Richmond region. This is where everybody wants to come. If you walk around this neighborhood at 7 p.m. on a Saturday night, there's people everywhere. So the fact that there is no hotel, it was really surprising to us and made it pretty clear to us that some sort of product as part of our multifamily building would do really well. The apartment hotel component of our building will target demand coming from visitors from out of Richmond looking for nightly, weekly, or monthly stays, groups of friends traveling, families who want an apartment, feel like they're staying at home when they come. We already talked about that we just delivered a similar concept in Charleston, an apartment hotel there called the Nickel Hotel. Whit, would you like to just do a quick overview of our properties already in this neighborhood?
Sure, I'd be happy to. And then I think, Jimmy, we're low on time, so I can give us the overview and turn it back to you for questions. But our first 3 funds we call Scott's Collection, a series of assets that were our first foray into the opportunity zone space. Those have all been leased. They're full today, over 95% occupied and refinanced with really attractive interest rates, kind of pre-run up in rates in pre-2022. I would say the best kind of crown jewel in the neighborhood is the Otis. It was Virginia's development of the year, a 350 unit development deal that cost about $88 million to construct. At refinance, it was valued at almost $135 million, returning over 33% to the investors. When I think about Chasen, when I think about OZ9, this is kind of the playbook that we're looking to recreate, both from a scale and execution perspective.
And just to emphasize, Lewis shared this earlier, but this project Otis, where you can see sort of this, the performance of this property, this is literally across the street from our OZ9 site. So we have a direct comparison to a project that we've executed in this neighborhood, and being able to return that equity to our investors was a big win for us and something we're really proud of. Here's a photo of Otis across the street. So we can wrap up here and take questions, Jimmy, but just for a quick overview, it's a $77 million offering size. We just launched. We have a 7% preferred return threshold for our investors. We've done something very unique, which I don't think any other sponsors have done, is that we've done an early incentive an early incentive for early investors into this deal. So we're doing 11% preferred return for the first $15 million that comes into this fund. I think we're getting pretty close to extinguishing that. So please get in fast if you want to take advantage of that early incentive. But that was really just to reward the first investors into this fund, given that we are still a few months away from starting construction.
Yeah, I love that. Well, thank you, Capital Square. We're a few minutes behind, but I'll give you a couple quick questions if you can answer them quickly, and then I need to move on. We had a question from Megan. She wants to know, are you able to accommodate an investment directly into the deal at the QOZB level prior to the June 30th deadline coming up?
Yes, I think we can.
Yes. Okay. So Megan, reach out to Capital Square. And then we had a couple questions about Marriott. Are they invested in your deal, or are they just providing some of the support?
They are just, we entered into a franchise agreement with Marriott, so they do not directly invest into it, but they go through a very rigorous review process to enter into a franchise agreement. They have an investment committee process, and we negotiated a lot of business terms with them. So
you said basically a master lease of 2 floors.
Perfect. And Lewis, I notice your book's behind you there. I've got a copy of Lewis's book, Section 1031 Exchanges. There's a couple chapters in here about QOF investing. Highly recommend you pick up one of those, or if you call Lewis, he might be nice enough to send you one. Really appreciate your partnership, the team at Capital Square. Jacqueline Rogers, one of your folks over there, did post in the chat just a few moments ago a link to the video. If anybody wants to watch that, click on that Vimeo link. But for now, I've got to sign you guys off, but appreciate you joining me today on OZ Pitch Day. Thanks so much.
Thank you, Jimmy, and thanks for the OZ Summit a couple of weeks ago. Let's do it again.
Thank you, Lewis. Thanks, everybody.
Thanks, everyone.